Hi, my name is Harish Bihani. I'm a part of the equity investment team at ICICI Prudential AMC. Today we are going to discuss our new fund offering, the ICICI Prudential Transportation and Logistics Fund. Let us delve deeper into the investment theme and portfolio strategy for this fund. Despite facing many recent challenges, the long-term growth potential of the automobile industry has never been in question. India's car penetration is just 24 cars per 1,000 people, compared to nearly 100 for China and over 300 to 500 for Germany, UK and USA. That presents a huge growth opportunity for India as per capita income increases slowly but steadily. Likewise, for two-wheelers, the penetration stands at around 110 two-wheelers per 1,000 people in India, way below Southeast Asian countries at 260 per 1,000. It's pertinent to note that India already enjoys a strong position in the global heavy vehicles market. India is also a prominent auto exporter and has witnessed improving export growth prospects in recent years. Several initiatives by the Government of India, such as the Automotive Mission 2026, scrappage policy, the Production Linked Incentive Scheme, are expected to take India to one of the global leaders in the automotive markets. So, where are we in the automotive cycle? The encouraging part is that based on latest data points, the auto cycle has clearly hit bottom. Several new positive levers are emerging for the industry, some of which are cyclical drivers that will lead to an uptick for the next 2 to 3 years, while others are more structural and is led by longer-term initiatives centered around increasing localization, higher export, premiumization, and opportunities coming in various other places. Firstly, from a cyclical standpoint, we observe that the industry volumes are lower than fiscal 19 but have largely bottomed. Commercial vehicles and two-wheeler volumes in fiscal 22 were 64% and 71% respectively of the pre-COVID levels compared to fiscal 19, while passenger volumes were 91% of pre-COVID levels in fiscal 22. With supply constraints slowly easing and pent-up demand in the PV space coming back, we expect a sharp rebound in volumes. We also expect cyclical benefits to support two-wheelers as well. The commercial vehicle market demand, which is linked to broader economic growth, will also benefit from retirals of vehicles. The age of vehicles is increasing, with over 45% of passenger vehicles now over 6 years old versus 30% in 2015. This suggests room for replacement cycles to emerge as the usage of vehicles has increased again with no COVID-led lockdowns. Some recent trends seen in the auto space are: first, in the passenger vehicle space, with supply issues receding and underlying demand, inquiry, booking levels high, a replacement pent-up led upturn is on the cards in the short to medium term. Second, the passenger vehicle model launch cycle, especially for listed passenger vehicle OEMs, is extremely strong, which when combined with a strong existing order backlog implies further market share gains for them. Also, the SUVs model launch pipeline is strong for the top listed OEMs, implying both value and volume gains in the next 1 to 2 years. Third, premiumization trend continues as reflected in the growth of SUVs from 21% of overall passenger vehicle sales in fiscal 16 to 49% in fiscal 22. Fourth, the Tier 1 auto ancillaries has been growing ahead of auto OEMs in the last 5 years, and this trend will likely continue, led by introduction of new products/segments, B, increasing exports, C, import substitution, and D, inorganic consolidation opportunities. Let us now review the logistics sector and the growth ahead. Logistics infrastructure covering a country's road, railway, waterways, air network is a critical enabler to economic growth and is the backbone on which nation marches ahead. The urgency to develop India's logistics infrastructure has been realized in the past decade, and efforts have been put in the right direction. The government has undertaken regulatory reforms, including the implementation of GST, the grant of infrastructure status to the industry, and the introduction of Gati Shakti policy and the National Logistics Policy. In the recently announced National Logistics Policy, the main objectives stated are to reduce the logistic cost from 13 to 14% to global benchmark level of single digits, and secondly, to improve global logistic performance index significantly from here on. These measures are long-term positives for the logistics industry, which will lead to greater efficiency and cost savings and more formalization for our overall economy. Overall, India stands to gain economically and environmentally from implementing an effective and efficient balanced modal logistic infrastructure system. Economic gain encompass capital savings and reduce waste both in the freight system and in the user industries. Environmental gains like reduction in emission and reduced energy consumptions are also likely. Lastly, moving to portfolio positioning. We intend to construct a portfolio with companies that will benefit from the following characteristics. I hope this brief will help you take a better investment decision. We thank you for placing your trust and confidence in our fund house. We'll work hard to ensure that the fund achieves its objective of good risk-adjusted return over a market cycle. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.